All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So, today we'll be talking about something very, very cool in the market, something very, very important in the market. Remember, I only bring strategies that I use, things that I use, something that I'm not going to use, I'm not going to bring it here, right? So, something that I use that is giving that helps me in the market, that's what I'm going to do. Right. So the truth is this: the testimonies keeps coming, the testimonies keeps coming, right? But it doesn't end there. There is still room to improve. There is still room to do better things, right? If you are making $1,000, it's time to move from $1,000 to something bigger. If you are making $10,000, it's time to move from $10,000 to something bigger. That's how it will continue to move from higher highs to higher highs, right? So today I bring to us something very important. But before I go ahead, if today is your first time joining this channel, you have not missed much. You have not missed much, right? You have not missed much, right? The only thing needed is just for you to subscribe so that you'll be able to receive all the videos, especially for the daily analysis which we send to this channel, right? Especially for a daily analysis. Remember to share to your friends, relatives, for them to join. Remember, this is a good news for them to capitalize on it and make good money from the market, right? This is our channel. It's not for me. It's not only for me. It's for us all. It's for me. It's for you that is watching, me and you too, right? So it's for all of us, right? So today we're talking about the untold truth about the ranging market. What did that tell you about the ranging market? Whenever you spot a ranging market, what comes to your mind? Are you thinking of going for a buy? Are you going to be thinking of selling? Are you going to be thinking of staying away from the market? Right? So a lot of times they tell us when you see a ranging market, stay out of the market, don't go for a buy, don't go for a sell, stay out completely out of the market, right? But the truth is that there are things you can still do. In fact, in a ranging market, that's when I make much more money from the market, right? That's when I make much more money because a ranging market can even last for some months, 6 months, 1 year. So at that particular time, what do you do in the market, right? So let's go ahead. But before we go, or before we get to this, what is a ranging market? Ranging markets are sideways markets or simply markets that are negotiating. It's not moving up, it's not moving down, but negotiating sideways, right? It also shows equality between the buyers and the sellers. But before going to the buyers and the sellers, let me show you this. This is how it looks like. Market moving from a support zone to a resistance zone. That is resistance to seller, seller zone to resistance zone to the seller zone to the resistance zone to the seller zone to the buyer zone rather. This is a buyer zone rather. From the support zone to the resistance zone to the buyer zone, seller zone, buyer zone, seller zone, buyer zone, right? So let's not mistake it. From the buyer zone to the seller zone, buyer zone, seller zone, buyer zone, seller zone, right? Let's not mistake it, right? What does it mean? It simply means the buyers in the market, they took the market from here. But the market has been buying. It can be found at a support zone and it can also be found at a resistance zone. Market has been buying, 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 getting to this place. Buyers took the market from here, bought to this particular place. That means at that particular time, buyers were in charge. The buying pressure was in charge. Bought to this particular place. What happened? After a while, there was a sell. Sellers took charge, sold to this particular place. Buyers took charge, buying to this particular. So this is what a range is in the market. So even though you don't know what a range is, this is the whether you've been trading, you know it before, you don't know what it is. So this is what a range means. Market negotiating, buyers and sellers, it shows that they are approximately equal in the market, right? So by the time you get this explanation, you will find out that characteristics wouldn't be a problem to you before I tell you how to trade it, right? Now, let's move to the characteristic. It number one, it often occurs at the end of either an uptrending or downtrending market. Yes, to see a ranging market, most of the time at the end of an uptrending market or at the end of a downtrending market, right? Especially markets that have been buying for long. Before that market we get to that market will definitely not continue buying. Before it will reverse, it will also range for long before reversing. And for a market that has been selling for long, before it will reverse to a buy, it will also range for a long time before going for a buy. So this is a very strategic pattern spotted in the market. But if you know how to trade it, it will be a good one. And I will show you how I deal with it, how I trade it today, right? It's not about staying out of the market. It's about knowing what to do at a particular time. You can't force the market. All you have to do, what is the market doing for me to follow? What is the market doing for me to go to that particular direction, right? So it shows negotiation and equality between buyers and sellers. We've said that. It's a wonderful opportunity for traders with the knowledge of support and resistance. That is why knowledge of support and resistance is very, very good in the market. Knowledge of support and resistance is very, very good. One has to have adequate knowledge of support and resistance. I think we have videos on that too, support and resistance. I support the buyer zone, resistance, the seller's zone. But I also show us how to trade it, how to kill the market with this strategy. The higher the time frame, the better for it, right? So a ranging market spotted in D1 is stronger than a ranging market spotted in H1. A ranging market spotted in H4 is stronger than a ranging market spotted in M30. It's stronger than a ranging market spotted in M15. So the higher the time frame, the better for it. So as a trader, whether you've been trading or not, you have to ask yourself, what is my higher time frame? What is my higher time frame? Starting with the type of trader you are, you go to what is my higher time frame. Then the higher the time frame you spot it, the better for it. Right? The higher the time frame, the better for it. Right? So it can last for up to 6 months to a year. A ranging market can last for 6 months up to a year. A ranging market can last for 6 months up to a year. I will also show us on the chart. I will show us on the chart how it works. A ranging market can last for up to 6 months to a year. It's really for a short time period. This is very, very important. When trading a ranging market, is for the short term, it's not for a long term, because that ranging market can break out. So somebody who is trading a ranging market, leaving it say for 6 months, for 1 year, is not advisable. That's why a lot of persons lose. You trade it for a short time before you exit, before stay. You don't stay long. You trade for a short time. You don't stay long in the market. You do not stay long in that market. You do not stay long in a ranging market. I'll quickly show us how to trade it. But we have to talk about the characteristics. To trade for the losing, to trade for a long time, allow the market to break out and close either to the upside or to the downside. To trade for a long time, allow the ranging market to break, give you a break to either or to the downside, which I will show us. This market has been ranging, right? Buying to this place, sell, buying, sell, buying. Attend to it as a ranging market. If you want to trade for a long time, allow the market to break for a long time, to break to the upside or to the downside, then you can follow that direction. Now, let me give us a cheat code. How I know whether a market is going to last, a market that just broke support and resistance, or a market that just broke a range, how it's going to last for long, or whether it's going to last for a short term. This is a cheat code. Don't tell anybody, but you can share the video, right? So if a range stays for a long time, when it breaks, it's going to last for a long time. Yes. When a range stays for a long time, when it breaks, it's going to last for a long time, whether to the upside or to the downside. Right? So before going to the chart to show us how it looks like, it also shows that there could be possible market reversal in the market, right? So whenever you see a range, over 50% chance that there will be a reversal in the market. Whenever you see a range, over 50% chance that there could be a reversal in the market. Whenever you see a range, there is 50%, above 50% chance that there could be a possible market reversal in the market. So whenever you see a range, there is possibility, especially the market has been buying at the resistance. Remember the phases in the market. So there's possibility. So this is it. Support to resistance, resistance to support, to a support zone. Let's quickly get to the chart to spot it. This is how it looks like. Let's quickly get to the chart, right? So this is USD/JPY. This is the current market price. This is the current market price, or you say the prevalent market price, right? So let's see if we can get the range. Let's see if we can get the range. Now look at this range. This is D1 time frame. Everything that happened here is a range. Don't say it must be perfect. It must not be perfect. A range in the market must not be perfect. A range in the market must not be perfect. A range in the market must not be perfect. A range in the market must not be perfect. Now look at this. From here to here is a range. So how long did this one last? How long? This one is as a support zone. You can see this one lasted from 2016 down to 2016. This um, June 2016 down to November 2016. You can see June, from June 2016, from June to November, that should be about June, July, October, November, right? 3, 4 months, right? You can see it here. You can see it lasted for months. It can last for months. I've not shown us how to trade it, so which I'm going to show us, right? Okay, now take a good look at which I'm going to show us how to trade it. I'm definitely going to show us how to trade it, but let's spot a different one too. Let's spot a different one too, right? So you can see the market ranged here, right? There was this one. This was the one we spotted, I think. Okay, no, now look at this one. This is a range. Don't say it must not be perfect. It mustn't be perfect before you say it's a ranging market. It must not be perfect before you say it's a ranging market. This one, 2011. Just take a look at the lows. 2011 down to 2012, right? It started 2011 July down to 2012 February. You can see how long it is, 6 months. So ranging market can last for 6 months. But are you not gonna trade? Are you not gonna trade? You will trade. So how do you approach the market? Trading the market that period, because sometimes they tell you to avoid the market, don't buy, don't sell. So how do you approach the market? How do you trade the market at that particular time? Now this is it. Map out your support and resistance zones just like this. Let's quickly get another one. I don't want to use that one, or let's, okay, I think I have one on the slide. Map out your support and resistance zone. It mustn't be perfect this way. Map it out, support, resistance, whether it's at the resistance at the top or down. Map out your support and resistance zone, draw the lines, use the lines to map it out. After mapping it out, allow the market, whenever the market, since the market is respecting the resistance and support, just like this, when it comes to the resistance, it respects it, coming back to the support, it respects it, going back to the resistance, it respects it, coming back to the support, it respects it. So you draw it like that. So anytime, whether it takes 1 month, 2 months, that the market comes to the support without breaking. Now, this is one of the ways that you know that the zone will not be broken. You have to have a candlestick confirmation. There must be a candlestick confirmation confirming that this market will go for a buy. Now, at the same time, when you spot it at the resistance zone, there must be a confirmation confirming that the market will sell. Now, such confirmations are things like engulfing candlesticks, right? Engulfing candlestick, the Harami pattern, right? Dragonfly doji, gravestone dojis. These are the things you use to confirm whether it's gonna break or it's not going to break. These are the things you use to confirm whether it's going to break or it's not going to break. But first of all, you map out your support and your resistance zone just like this. Look at, I map out my resistance, my support zone. So when the market comes to this particular place, giving me candlestick confirmation, I buy. Just take a good look at this. You will see, look at my cursor. Here, there was a bullish engulfing pattern here. If you look at this, let me see if I can zoom it in. Right, okay, I've zoomed it in. It's now bolder. You can see there was a bullish engulfing here, which gave a confirmation. All these things, they are still in a zone. You buy. Take your profit before the nearest resistance. That's how to trade it. Before the nearest resistance. Then, when it's not coming down, you go for a sell. You can see there is a bearish engulfing pattern here for a sell. All these things are secrets. In the market, there must be a confirmation telling you that the market will do what? Will sell. When it gives you those confirmation, you can now go in for either your buy or sell, depending whether you are in an uptrending market or a downtrending market, right? So this is a range. You can see a range can last for a long time. A range can last for a long time. So whenever it's spotted, you capitalize on it, because a range can last for a very long time in the forex market, right? So another way is that by the time you draw your support and resistance line, if you don't have a confirmation, don't take entry in that market. If you do not have a confirmation, even when the market is at a support, at a sensitive support, for you to buy, I only bring things that are profitable to me and how I do it. So if the market comes to a support, it has to give you a candlestick confirmation, a bullish candlestick, either a dragonfly doji, a morning star, bullish engulfing, harami pattern, bullish harami, a lot of them. It has to give you that confirmation that this market will buy. Same as the resistance zone, it has to give you confirmation before enter for a sell. But if it doesn't give you and start breaking, if it breaks below, that means that market, there is possibility for that market to head towards that direction. There is possibility, and the longer the range, if it breaks, that's to tell you that it will take a long time for that market to return. So allow the market to break. If it breaks to the upside, there are two ways to trade it. If it breaks to the upside, wait for a rejection, or let's say a retracement in the market, right? If the market breaks to the upside, wait for a retracement. Allow the market to retrace back, to do a retracement back. Allow the market to make a retracement back before you go for a buy. That is, if it breaks above. If it breaks above, allow the market to do what? To give you a retracement before you go for a buy. That's one of the major ways of trading it. Then the second way is also an aggressive pattern in the market. The second pattern is aggressive entry in the market. So how is that one? By the time the candlestick perfectly breaks above, you can go in for a buy. I saw one here. I try to bring it for us. Yes. Okay. Let's see to this. Let's see to this. Yes. This. Let's see to this. Um, let's see to this. So two ways to trade the market. Two ways to trade it. Take this to be your range in the market. It has been ranging for a long time. Ranging for a long time. Anyways, this is an ascending triangular pattern. It's a continuation pattern, an ascending triangular pattern. But ascending triangular pattern is still a range. Yes, but it's a range that is hitting towards the resistance, right? So ascending triangular pattern is not a perfect range. You can say it's an ascending triangular pattern in the market. It's an ascending triangular pattern in the market. That was why the market could continue for a buy. This is it. That was why the market could continue for a buy. But this is what I'm trying to establish for us. What is it? There are two ways to trade it. When it breaks to the upside, allow that candlestick breaking it to break and close. If it's the D1 time frame, it should break and close. If that's the D1 time frame, it should break and close. By the time it breaks to the upside and close above, you can go in for your buy. If it doesn't close above, you don't go in for a buy. Another way is that you have to have or allow the market to make a retracement back to the zone. But if the trend stayed for a long time before breaking, there is possibility that the market might not come back to the initial broken zone. So allow the market to break above. Then when it breaks above and close above, you can go in for a buy. Else, you wait for a retracement. Have you seen the ranging market types and how it looks like, how to trade it, right? So you're enjoying the video, do well to share. That's the most important thing, so that people will get to know about most of the things we are talking. Whether you're a professional trader, you've been trading, you've not been trading, is for us. This is for us, right? So as a way of recap, the untold truth about the ranging market is what we're talking about. We said that the ranging markets are sideways markets or simply markets that are negotiating. It always shows equality between the buyers and the sellers, right? So this simply means the buyers took the market from here to this place, sellers took it back to this place, buyers to this place, sellers to this place, buyers took it to this place, sellers to this place, right? So we went ahead to talk about a lot of characteristics often occur at either the end of an uptrending market or a downtrending market. It shows negotiation or equality between the buyers and the sellers. It's a wonderful opportunity for traders with knowledge of support and resistance. So knowledge of support and resistance is very, very vital. The higher the time frame, the better for it, right? So it can last for 6 months to a year. It's traded for a short time period, right? To trade for to trade for the long time, you have to allow the market to do what? To break out. It also shows that there could be possible market reversal in the market. So this is it. Buying, selling to this place, buying, selling, buying. So approach the market the way it is. We have to approach the market the way it is. The market is easy, but it's just to follow the flow and you see yourself making a whole lot of profit. You hope you enjoyed this video. Remember to tell your friends to join. So thank you very much for joining us today. We are so happy you joined us for today. So do well to go make some bucks, make some money, make as much as you wish in the forex market. Thank you so much. Thank you so much. Thank you so much. Bye now.